Oh, for that Atwater here. Listen to the words for just a second.
Dead blood in the streets, it's up to my ankles. Sheet blood in the streets, it's up to my knees.
All right, that's the Doors. There's blood in the streets. All right, let's talk about that. It's a market. It's Friday afternoon. It's almost 4:30 here. I just got home and check this out. By the way, all these videos I just do on a first take. I don't edit them. I don't do anything to them. Gotten a little bit better at understanding the sound quality and the way things work on this thing. Let's talk about a book first here. How to Trade in a Bear Market for Dummies, the 4th edition. You can trade markets up. You can trade markets down. You can trade markets sideways. 3 basic directions of a market. In all over the news, if you turn on the nightly news tonight, it's going to be the Dow was down 665.75 points. Drudge Report says 666 in big red numbers, trying to imply that that's a bad, terrible thing. But let's talk about what is going on here. All right, that's how to trade in a bear market. Here is the SPY right in front of you, and if you recall, look at the last 2 videos published about the S&P 500. That candle was the exit candle for Friday, and if we look at the days right here, this red one here was Monday, Tuesday, Wednesday, Thursday, Friday. That's today. The market's been closed for several hours now. Let me zoom that in. Let's make it a little bit larger to be able to talk about or take a look at what I'm thinking here. Let's pull that down. There we go. All right. So we exited the market here right at the peak on Friday market at close. As I pointed out in a previous video here, the combination of these 2 candles is a bearish harami. All right, and then a bearish harami usually needs further confirmation, but you got further confirmation from it right by the next day. You got another bearish candle coming in. All right, and then we got this. This was yesterday's close, and I was like, I wonder what's going to happen on Friday here, because if you look at the previous video, I did talk about the relationship of the blue line. This is the 20-day simple moving average right here, and I said particularly I don't know what it's going to do when it hits that line. Well, it made it very obvious what it did for us today. I thought there was 2 chances here. It might hit it, give a bounce, and then a back down. Okay, or what did the other possibility that happened, and I did put it out there as well, was we'd get a powerful red candle breaking through. And why do I say powerful? Draw your eyes to this thing right here. Okay, this is the volume. Look at the size of this volume blue stick right here in relation to normal trading volume. Okay, there's a peak out there, there's a peak there, there's a peak, and boom. This was just about everybody jumping on the sell train. Oh my gosh, my investments, my this and that, or whatever they were doing. Maybe they were trying to catch a bounce here. I don't know. But remember, if you go back 2 videos ago, my pain meter was like on tilt. I could not stand it anymore, and I jumped off the bus. And I used a phrase, the sell train, right? You got to get off before the sell train. Another way of saying that is sell into strength. Okay, you don't want to sell. These people right here are getting crushed because they're selling into weakness. You're just trying to dump the shares. You're like, oh gosh, I had $10,000. Now I have 9. Now I have $8,400 or something. Whatever your investment happened to be. You're like, sell. But if you sell into strength like this, I mean, actually anywhere in this leg here, it's very easy. It's not a big event. You might miss out on a little of the upside profit, but what you miss out on is the screaming panic of what was going on today. All right, so talk about where I've talked a few times about the Mark 269 here on the SPY. All right, that's because it's looking at this breakout level right here from back in. That's well, this started the year. If you see 2017 right here, this was the first trading day of January. Was right here. We came up here, second trading day, third, fourth, etc., and it just rocketed on up there. Very nice, appreciable amount of money. I'm glad I was long. Like I said, I was long from about the 250 level. Where am I looking to get back in? Here, we'll look at a conservative entry at around 269. Why? Because I think this thing is going down here to this level that's commensurate with that. And that's what I said on that. If we get that big bearish breakout to the downside, that's where I believe we're going to see. Also, what we might see is if I were to look at Monday, Tuesday, Wednesday, Thursday, Friday next week, we might see a little bit of this, and everybody's going to go, oh, the market's recovered. But that's a Dow stick to me, right? That's a trap, is what it is. Okay, a retracement to 58 or 50% on the stick, and then, bam, we go down to the line. And I think that could happen pretty quickly. I think it could happen next week. The S&P 500 closed at 275 today, 275.45, and so we're not that far off the mark here from this 269 price. All right. When we were back up here in the 285 range, yeah, we were quite a bit of ways, but now we are within reach. Okay, this is only $6 more or so for that market to trail off. $6 on the S&P 500. Let me pull up a calculator here. So $6 from its present price. Let's just use $6 divided by 275 for easy math. We're only looking for a 2.1% declination. What back here earlier in the week seemed like a huge thing to come off. Not anymore. We're only 2.1% away from that particular point there. And the market dropped, what, almost 2% today. How much did it drop? It was from right around 280 down to 275. I mean, that's a 5.5 point drop, and we're only looking for 6 more. That's 2, 3, 4 days of trading. Like I said, Monday, Tuesday, Wednesday, we might see, something like this, and bam, then we get that hit right there. Now, does that mean, guys, that I want to buy right there? No, I want to watch the charts. Okay, let me show you this thing here while I'm thinking about it. Come over here to the magic internet, and we're going to type in this thing called Morning Star Reversal. Do I know that this is what the pattern is going to be? Of course I don't. But this candlestick pattern is actually very common, and we got to wait and see. It would take at least 3 days for this thing to form. Oh boy, they didn't show me a picture. Is there a picture over here of it? No. Hang on. Let's see if we can get a picture of a morning star in there. There's one. So here's a morning star reversal pattern. Break it down real quick. Go to pen and pink. So what we look, here's the downtrend, a sharp downtrend that we look for. And we're going to look for a candle. And then we're going to look for what is called sort of an indecision candle on the market, a little bit low on the low side. And this candle right here, I want to be, it's going to look something like that. It might look like this. It might look like this. There's a number, but usually it's kind of smallish. It might look something like that. Who knows? We'll see what it ends up looking like. I want an indecision candle down at down at this point right here. So if we look here, let me bring that picture thing back over here. Make it here. How can I do this effectively? Not like that. All right, that's not my idea. Is not. Oh, that'll work right there. Let's do that. So we're going to look for that indecision candle down somewhere at this point. So what we might see is a red down, an indecision, followed by what's over here, right, is a followed by some sort of a green candle. And if the market closes with a strong green, that's a Morningstar reversal right there. Some notes to ponder about a Morningstar reversal. All right. The candles can switch. Sometimes you'll see, this candle and this candle switch. Sometimes you'll see, how do I erase that? Sometimes you'll see, this candle and this candle switch. But you just got to learn to interpret it and watch it. And then is when you want to re-enter into the market on the long side. You'd go here and you'd look for this bounce. Now this doesn't mean, oh my gosh, throw all your money back at it right now. No, this means, okay, let's put a little bit of money, and I mean a little bit, I don't know, 10-15% buyback into your account. Here, put some money. If the trend continues, you might add a little more. Okay. What do I know? I mean, you get too far out in the future and these things don't work very well, but let's say it bounces off here. It does this number. It could retrace 50% on this, or it could retrace up to this 38.2 fib level. Who knows? I don't know. We might see another bounce. We might see a number of different directions. That would be a nice pattern if that forms over the next many trading periods, because I've explained to you guys this before. This is a double bottom, and you go, ooh, as soon as it breaks that neckline, right? Or you can go here on an MSR, Morningstar reversal, and enter that baby. If it does that, and then you're going to add on to the trade again when it breaks out the all-time high. I personally think the market will end on a high note this year, but I can't tell the future. I just read the sentiment. That's all I do when I'm producing these videos. All I'm doing, guys, is interpreting sentiment in the market. Bullish, really big college party. Fred jumps out. Cops show up, aka the Bears. Boom, it goes down. We wait for confirmation. We enter. It goes up. I've been doing it for years and years and years and years. It's the same old thing, all right? Just that this previous bull market has been actually quite a bit protracted in terms of length, all right? That's it, guys. Have a good night. It's like I said, it's Friday afternoon here, and I will see you later. Blood in the streets. It's a good thing. So why did I bring that up? There's a stock market saying, buy when there's blood in the streets. When everybody else has just been thrashed, that's what we're waiting for, that Morningstar reversal to show up and go, blood in the streets. That's our buy point. All right. See you guys. Bye.